Hello everyone, friends. This is Mozart. In this video, I would like to talk about the amount of time Bitcoin has within the current movement it has taken, which is an upward movement. And as a rule, this has always been the case throughout history since its creation. So, probably the first and most important metric that I always pay attention to is the ratio of Bitcoin's price, this black line, to the average purchase of short-term holders. These are the wallets that have received Bitcoins in the last month, ranging from 1 hour to 1 month, that is, up to a month, such as. They basically always work the same way. The principle of operation for this line is the same. In bull markets, it acts as support. That is, here, here, and here. Also in bear markets, resistance. When the trend is going down, rebounds to it are resistance. In bull markets, there are occasionally downward breakouts, which are often falls, just as in bear markets there will also be false upward breakouts. After a false breakout, such as the one following the adoption of the Bitcoin ETF, the price surges upward, but short-term holders are not in a hurry to buy. They are still selling, not believing that this is the beginning of a new trend. Then they suddenly start to believe in it and begin to buy, chasing the price. Then the price goes up, they keep buying, and eventually they converge. That is, even if you look at the penultimate exit of the shoemaker, it was the same. The price went up, short-term holders were waiting for something, then suddenly realized they needed to buy. The price came to them, and then fell again. The price went up, short-term holders are still selling, and their realized price is decreasing. Then the price will either move further or somehow go up, and they will realize that it's time to buy again and catch up with the price. So, what is important here? The important thing here is this histogram, in this case descending, which represents the number of days of the so-called false breakout. As a rule, in bull markets, the number of days of false breakouts does not exceed 30 to 40 days per month. Currently, this pattern is being observed. I'm not considering the off-season, like we had in the summer of 2023. I'm specifically looking at the bull market. For example, the dip in January-February of the current year lasted for 20 days. The second-to-last dip lasted for 30 days. The first bottom of the sideways movement, second bottom of sideways movement 34 days. If we rewind back to the last cycle in 2021, we will see the same thing here. A drop of 13 days, 17 days, well, there was an off-season here too, if in trend. 12 days, a very strong drop was due to the Chinese ban. 30 days, but note, also not more than 30 days. Then 15, 18, and so on. But here the structure was complex. Then a 23-day drop followed by a transition into a bear market. And also, it is important to note the window that forms between these dips. So, this window, what I mean is, this is a growth window. When there were many liquidations, especially among short-term holders, the market absorbed and digested them well. These are the windows during which the market grows. The main windows before the next significant correction. Typically, in regular markets, they are equal. From 1 to 3 windows of decline, that is, approximately from 30 days to 2.5 to 3 months. If we pay attention, this will coincide, meaning here the growth window was a month, here the growth window was 2 months, here 2.5 to 3 months, and you can observe the same thing in other cycles in these Bitcoin markets. Here a month, 1.5 there, and so on. So approximately from 1 to 1 to 1 to 3. Growth window. Our growth window is, we exited this line on July 14th, 15, and today is the 23rd, been only 8 days. Since today is the 23rd, been only 8 days. In other words, roughly speaking, even if we take it 1 to 1, we still have about 3 weeks left, which is approximately until mid-August, at the minimum if we look at it. What I mean when I refer to a growth window is more of a formal, nominal meaning. Here, it refers more to a stability window where the price remains consistently higher. The average purchase of these holders, but it can be consistently higher in different ways. It can just move sideways, while altcoins grow during this time. It can, for example, grow like here. The main thing is that it is above the average purchase of short-term holders who bought Bitcoin within a month. That's the first point. One of the most important metrics. This is not just some moving average calculated from the price. No, these are the average purchases over the past month. That is, new, short-term holders. Everything is averaged here. And it doesn't matter whether it's BlackRock or other suits who have come here. In general, the entire market is shown here. All the sentiments, and their average purchase price. The same thing. Next, the same metric, but now applied to the regular moving average, specifically the 50 moving average. Here, in principle, the information processing technology is the same as the one I just showed, only its meaning is more primitive. If we had real purchase prices for Bitcoin there, here we just have the 50 moving average, which, nevertheless, works quite well in technical analysis if you know how to use it. Here, you can also pay attention to standard corrections within the framework of a bull market. As a rule, they do not exceed 50 days and are within the range of 20-25-50 days. If any of the corrections exceed 50 days, it very often transitions into or marks the beginning of a bear market, the first wave of the bear market. But even now, in the off-season, 44 days, that was August 2023, for example, 48 days. Last two corrections, deep sideways trend. Second last lasted 32 days, last 27 days. Looking at the previous cycle, the same thing. Here's a deep correction. This is the beginning. The first signal of the transition to a bear market was 72 days after the Chinese ban. Until that moment, there were shallow corrections. Here, 35 was the deepest in the last season. And in 2018, they were shorter. They were quickly bought up. Volatility was high and liquidity in the system was lower. 17 days, 11 days. 8 days, 11 days and 8. Well, here it's a total of 8 plus 5, 13 days. In the off-season, it was just 44 days. So, no more than 50 days. Corrections are allowed to last up to 50 days. And it makes sense why corrections are taking longer now, because there is much more liquidity in the market. And returning the asset to its place, for example, like it was in 2017 to 2018, is no longer possible, right? The market has become much heavier. Therefore, both corrections and growth periods last longer as a result. Here, the growth periods are these upward movements. These emerald histograms follow the same rule as the average purchase. Right here. This is a 1-to-1 to 1-to-3 growth window. It ranges from 30 to 100 days. Up to 3.5 months, this is the growth window for the 50-day moving average. 3 months here is the growth window specifically at 50, not the last purchase at 50. There's strong growth until January, until the approval of the Bitcoin ETF. The next sideways movement has already ended, 66 days. The last growth window was 30 days, during which news about the application for an Ethereum ETF emerged. And now it has been going on for only 8 days. In past cycles, there were 48 days, the end of the bull market, 46 days. A growth window, a huge growth window of 200 days, there was a super cycle here. And in 2017, strong growth lasted for 100 days, 48 days, 90 days, 60 days, roughly about 1 to 3 from the window of decline. Now we have broken out and notice how we are declining in the sideways movement. Minimum. We are just unloading in the sideways movement. And it is quite likely that the next growth window could be much higher than the first and even the second of these extremes. The next, well, just impulse, the next global wave will go up. Well, it has lasted only 8 days. So in principle, there is still some margin. Even if we take it 1-to-1, and the last window of decline was 30 days, 27, we still basically have trinities here. And then the following indicators, it seemed terrible. Before we were withdrawing bitcoins from exchanges. Now all we do is transfer them. The influx into the market is huge. Right here, they are bringing in, importing. By the way, there is almost no Ether in this metric. It's all Bitcoin. The same thing here, it seems they have started withdrawing USDT from exchanges. The same applies to purchasing power, as realized profit has also started to surge towards the critical zone. But this can all be explained by a simple, common justification. In the last month, roughly a month, the German government has been very active with their transfers of bitcoins to the exchange. MTGOX has become active with transfers to exchanges and, of course, such large tranches of Bitcoin, specifically Bitcoin to the exchange, are not reflected in this metric at all, as they are entirely withdrawn from the exchange. Naturally, they will have an impact. This doesn't reflect their sentiment, whether it's MTGOX trustee or the German government analyzing somewhere. Maybe Bitcoin will be at 80. Let's wait. Sell at least at 80. Why are we transferring like fools now? MTGOX doesn't care about this. It translates as is. This affects the metrics. The last month is not indicative. It's just a consequence of the inevitable. But this does not affect the market sentiment. And you can see that with such large transfers, Bitcoin is growing. Although in such cases, it is the end of the rise or fall. Yes, it had already grown significantly before this. Next, what's interesting? It's about the peak profit for short-term holders, meaning whether there is still room for them to increase their profit. I will not take past cycles, not even the past ones from 2021. I will take the current cycle, which started at the beginning of 2023, when Bitcoin jumped from $15,000 to $23,000, marking the start of a new bull market. Then it went into the off-season, and here the main wave of the bull market began. So, what do we have here? Here we have peaks by which, in principle, we can determine some local highs of this bull market. Many of these peaks form highs through divergences. So, for example, how did this happen? Right here, or right here, or right here, or right here. In short, almost everywhere, even here. Practically everywhere, it turns around through divergence. So it turns out that Bitcoin reaches some extreme, well, some high price, we get a profit peak and short-term holders lock it in. Then Bitcoin reaches an even higher price, short-term holders take profit again, but this profit is much smaller than the first time. It would seem that although the price of Bitcoin is higher, this is the weakening. As a result, the next movement occurs and through divergence, Bitcoin begins to correct or even drop significantly. In a sideways market, we usually see a peak without divergence in the sideways phase. For example, this was the case in the previous sideways phase from May to June. I don't know if the sideways movement will continue or not. But for now, we see one peak, and if this is indeed a true breakout from the sideways movement, although we haven't broken out yet, we are at the upper boundary. It is quite likely that we will see growth towards these peak values, which were present even in the cycle and have always limited this growth. I won't look at 2017 either, where there were peak values of 35 to 37% profit for short-term holders, obviously a different volatility. Here, the peak profit was 20%. This was January 2023, 16%, 11.5%, 15, 16%, 14, 20 to 21%. Even in the last Angel Bogovic, it was 11.2%. Now the peak profit is approximately 9.8 to 10%. That is the potential if we go all out. If Trump speaks in Nashville right now and says, Bitcoin is our future, everyone, I support Bitcoin. We can get another 20%, which means another 10% increase in price from the current levels. So, that's to 77 somewhere. That's at least plus 10%. After all, I'm comparing profit with the net change in price. Well, even at the minimum, there's still a chance for the same 12, 13, 15%. And this is just the first wave of the rebound. If we break out of the sideways trend, we get a correction. Bitcoin forms the next wave somewhere around 83, and we get a new profile not at 15, but at 9 to 10%, a divergence, and again a strong correction. That according to this metric, there is room to go. There is room to go. Even within the framework of the latest rebound, for example, The same May rebound was stronger in terms of profit than the current one. It was 11.2%, now it's 9.8%. Still some room to go up. Essentially, it exists. And there were no divergences. Because if we do break out upwards from this sideways movement and secure above $73,000, then it will most likely go significantly higher. 77, 80, 83. There we take into account the fact that we have an overlap in time. We have at least 3 weeks ahead of us. Interesting 3 weeks. Well, yes, not bad expectations. Futures are usually dull. Just the day before yesterday, the funding rate jumped by an average of 0.01% across all exchanges. I'm not just looking at Binance or Bybit, but an average of 0.01% across all exchanges. Before this, there was 2-3-5 times less dust even on days when it went into the negative zone to zero. For a few hours, futures are not loaded. Not loaded. That means the market tension here is small. Panic selling at current prices is not possible with such funding. That is, short-term holders, as you can see, are still selling, even despite the rise in Bitcoin. They are removing it. They are afraid. You can see it along this line. They all think, I broke even, I'm even in a small profit, I'll get out and forget about it forever. The pressure is minimal. The maximum pressure was right here. It was February, March, and still March 31st. The funding was strong. Then a correction began. This metric shows no pressure, allowing Bitcoin to grow. Nothing. Today we have the launch of spot ETFs for Ether. Then the most important thing, probably more important than the Ether ETF, is the conference in Nashville on July 27th, where Trump will be speaking and Musk will also be there. By the way, he recently set his Twitter avatar to laser eyes. Well, X, as it's called now. So, basically, I am now looking at the overall chart again. It's clear that there can be some corrections within the day. Yesterday, I recorded a video where I talked about what they might be. Intraday, some corrections, but overall, I expect the price to go higher, even within the current sideways trend. Even within the framework of what we have achieved so far, I still think that the price could reach 70 or 72. Even testing the peak at the very least is possible. Well, we have at least 3 weeks ahead with at least some support in terms of timing. And we'll see what happens next. Thank you all for your attention. This was Mozart. I hope you found this information at least interesting. Have a great day and goodbye.